are still paying $500,000 a year in taxes every single year, it's time for you to stop. You're not alone. Most CPAs are very good at filing taxes, but what they're not good at is outside the box tax strategy. They went to school for 5 years. They're sick and tired of learning. They don't want to go read 77,000 pages of tax code just so you can pay a little less in taxes when they're still getting paid the same amount. That's why they tell you to W-2 yourself out of Nest Corp, set up multiple LLCs, just go buy some real estate. The Augusta rule that they probably heard from a tax guru on TikTok. Max out your IRA, try cost segregation. How about bonus depreciation? Section 179, buy a 6,000 pound vehicle you don't want or need. These are all generic tax strategies, and they all have three things in common. Number one, they're outdated. Number two, they're completely generic. And number three, they require you to part ways with your money. You see, the IRS doesn't want your money because your money doesn't actually fund the government. What funds the government is the government printing money that's done through the Federal Reserve central banking system. So telling you to spend $1 to save 30 cents is flawed logic. And it's the reason why, even though despite the fact you make millions of dollars, you still feel completely broke because you don't have any money left at the end of the year. And that's what the IRS wants. It keeps you broke, it keeps you in servitude, and it keeps you living under the guise that we're operating in a fair and just system where they don't just print money when they need it. The truth is, the idea of you going and working for money and trading your time for money and having a job is what they want you to think. There's no point in you doing that because they print the money. That's why you have to learn how to leverage your time and leverage your money to make money. So what we're going to do is we're going to restructure things. We're going to put your business into a business trust, and then we're going to put your assets into a family trust where then the money can flow into your business trust and through a K-1 into your family dynasty trust. Then the income that's left over will be spent on trust expenses, and anything after that will be tax deferred in perpetuity. We're going to kick the can down the road from year to year to make sure you never have a big tax bill like you've had for years in the past. The reason we can do this is because the trust is non-grantor, meaning that the grantor is not you, you are the trustee. And it's complex. Complex means, it's an accounting term that means the trust can retain the income inside the corpus of the trust, and it can be tax deferred. The only way to make it a part of DNI, distributable net income, is to do a distribution and not allocate it to corpus, which is exactly what we don't do. We allocate it to corpus and we defer the taxes. These two key things dictate how the IRS is going to tax the income within the trust. DNI is a formula. If you can master that formula, then you can defer taxes in perpetuity. This is the exact structure that's been used by Donald Trump to make $5 billion every single year and pay $600 in taxes, just like he told Hillary Clinton and the entire world. He doesn't pay taxes because of the tax code. And so the key thing you have to learn